Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before I jump into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this. I'm in the Thinkorswim platform, I'm on the scan tab, and I'm going to be scanning the S&P 500 this week. So let me go ahead and click scan. And here I have it sorted by implied volatility. So the stock with the highest implied volatility right now, and again, this is after hours data, so please keep that in mind. It could change when the market opens, is currently Carnival. And it looks like Carnival has earnings coming out on the 29th or on Friday. So that kind of explains why the volatility is currently pretty high. We can go ahead and jump over to the trade tab, put in the Carnival ticker, and then we can go ahead and look at the option chain. I'm going to be looking at 8 days out. So currently 8 days out, you could sell a cash secured put at the $13 strike price and make about 1.85%. If you're interested in this column that I have on the far right, it's a custom Thinkorswim script that calculates the percentage profit for cash secured puts. It also gives you an estimate for covered calls, although the math is a little more complicated for covered calls, so it is accurate for cash secured puts only. So in this case, if you sold the $13 strike price, you could collect about $24, and that would be 1.85%. Assuming your risk is if you got assigned, so after earnings comes out, the stock drops and at expiration of your option closes below $13, you would need $1,300 to be able to buy 100 shares of the stock at $13. On the covered call side, it would cost you $1,444 right now to buy 100 shares, but you could sell the $15 strike price for about $52 or approximately 3.5% in 8 days. Let's go ahead and jump back to the scan tab, see what else is on here. We have Enphase, Tesla, Etsy. Feel free to pause the video and take a look at the entire list as well. Let's go ahead and look at Moderna. It is a more expensive stock at about $100, and the current volatility is 51%. I'm going to jump back to the trade tab, put in the ticker, mRNA, and again, we're looking 8 days out. On the cash secured put side, you could get 1.35% selling the $97 strike price and collect about $130 for that. Your risk here would be you need $9,700 in case you got assigned on this position to be able to buy 100 shares. If you wanted to do a covered call, it would cost you $10,027 in order to buy 100 shares, but you could sell the 101 call option and collect about $238, $240 maybe, coming out to be about 2.37% in 8 days. Let's go ahead and look at the rest of the list here. We have Netflix, which is definitely a more expensive one, and they have earnings coming up on the 18th, so volatility is going to most likely continue to increase as we get closer to that. We have AMD, United Airlines, and a few others. Again, feel free to pause and take a look at the whole list. If you enjoyed this video, don't forget to like and subscribe so you can stay up to date on all of my videos, and I'll see you all in the next one.